Now the CPI, or the Consumer Price Index, which is a key measure of retail inflation, dipped to 5.09% for Feb 2024. Now this marks a slight decrease compared to the Jan 2024 figures of 5.1%. Now in rural areas, the inflation rate remained unchanged at 5.34%, while the inflation rate in the urban areas saw a slight dip, going down to 4.78% from 4.92%. Now food prices continue to rise in the month of February, with overall inflation in this category reaching 8.66% compared to the 8.3% numbers in the month of January. Now this increase was driven primarily by a surge in vegetable prices, which jumped to 30.25% from 27.03% in the previous month. Cereals rose in price by 7.6%, pulses by 18.9%, sugar by 7.48%, and spices by 13.51%. Protein-rich items like meat and fish and eggs also saw price rises. Now in the clothing and footwear category, inflation dipped to 3.14% from 3.37% in the month of January 2024. Now the inflation rate for fuel and light also contracted further, reaching minus 0.77% in the month of February compared to minus 0.6% in January. Housing also saw price deceleration. Now the recent MOSPI data suggests the potential moderation in inflation. However, a closer look at the details and a comparison with the RBI's target are necessary to fully understand the current economic climate. Now the latest data indicates that the inflation rate remains within the RBI's tolerance band of 2 to 6% for the 6th consecutive month. However, this marks the 53rd consecutive week where the headline inflation figure had exceeded the RBI's medium-term target of 4%. Also, the core inflation, that is excluding the volatile food and energy prices, registered a rate of 3.3% growth in February. This represents a decrease from 3.6% growth in the month of January, which is a good positive. Now, the further path of inflation will depend heavily on the outlook for food prices, which continues to remain uncertain at this point. One big factor is the monsoons, which have been a bit uneven lately, and then we have these near-term risks to the inflation outlook due to the fluctuations in the global crude oil prices. Next up is the industrial production data. Now the index for industrial production, or the IIP as it's well known, is an index that tracks manufacturing activity across various sectors of the economy. Essentially, it gives us a pulse on how well different industries are doing in terms of production. Now it's an important indicator because it reflects the overall economic health and activity levels of a country's industrial sector. When we look at the recent data for India, we see that the growth in industrial output slowed down to 3.8% in the month of January. Now this was actually below what analysts were expecting. What's interesting is that this figure remained unchanged from December 2023, which was also at 3.8%, but it was later revised upwards to 4.2%. Now the slowdown in January was primarily driven by the manufacturing sector, which grew by only 3.2% compared to a 4.5% growth seen in the month of December 2023. Now this decline in manufacturing production growth offset the higher rates of growth in the other two key sectors, which is mining as well as electricity. Now if we break it down further into use-based classifications, we see a mixed picture in the consumer goods segment. On one hand, the output of consumer durables increased significantly by 10.9%, largely due to a favorable base. However, the output of non-durables contracted, indicating weakness in consumption. Now, what's the key takeaway here? Well, despite the slowdown in manufacturing, there's optimism due to the government's strong push for infrastructure and construction projects. Now, these segments are expected to remain robust. However, for overall industrial activity to pick up, a broader improvement in consumption is absolutely crucial. This means we need to see better performance in areas like retail sales, and with retail inflation moderating, there's hope that we might see an uptick in consumption soon, but it's something we need to keep a close eye on. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.
Equity investments are subject to market risk. Read all investment related documents carefully. Visit www.researchandranking.com